In this video, I'm going to talk about 5 times when it's not a good idea to buy a breakout. Stay tuned. Hey traders, a very warm welcome to you. Okay, so breakout strategy, very simple kind of textbook strategy. We all know and love it, and we either trade it or we don't. It's either something that's made us money or it hasn't. But I'm going to give you 5 times when my experience is my opinion for this one, and I'll love to hear what you guys have got to say in the comment section below about this kind of thing, because everyone's got their own opinions on breakouts. These are my 5 times when I believe you shouldn't be buying a breakout. So the first one is when price is still in a range. What do I mean by that? Let me get my pen here. What do I mean by that? So we have price doing this in a range. Let's say we have this here and we were about to break out of this high here. Can we still see on the screen? We can. Okay, there's our range at the moment. Let's say that's you know what, that could be any kind of range. That could be a week if we're intraday trading. It could be longer. It could be a couple of days. It doesn't really matter. Point is, price is in a range and we're about to buy this breakout here. Okay, classical breakout above support, above resistance. Sorry. Would I take it? No, I wouldn't take it. Why wouldn't I take it? Because we're in this bigger range. I'm always zooming out and I'm always checking where we are. It's very easy to kind of have your chart zoom right in on there and you think, oh, you know what, this is going to explode through the high. You know what? It could do. I'm not saying that this is definitely don't take these, but for me, I filter out breakouts like this. If we're still in a range, there's still all these people who are involved in it from here back who don't care what is going on here. The only people who are caring about this breakout are the people who are watching this time frame. So you have less and less chance of it actually being a genuine breakout, you know, as opposed to, let's say, this one up here. If it moves up to here and breaks out through that level, that's far better, because, you know, we're on a bigger picture here. We've taken out a bigger resistance point. It's not within a range. Maybe it's at fresh highs. Maybe, you know, other things have happened. But within the range, I would always avoid it. So when price is still in a range, don't trade the breakout. It's easy to get sucked in when especially if we're trading a smaller time frame. We zoom in on it, we look at it, and we think it's going to break out. Just take out a split second just to go and just check this, zoom back. Or even better, if you've got a trading plan prior to the day or prior to the week, whatever, you know, only take breakouts above this level or below this level, because then we're in fresh territory and I've got a chance of it working. All right, guys. Number 2, when solid resistance is close. Let's give this a wipe and let's give you an example here. So solid resistance, we know about support and resistance. If you're not sure about support and resistance, I have done a video on that. Go and check it out. So we have, let's say we use the same example here. We're buying this breakout here, but we have a solid resistance level up above from prior before. I'm not going to draw it, but we all know how we draw our support and resistance levels. And I say, if you haven't, go and check out the video I've done on it. So we're buying a breakout here, whatever that may be. Maybe it's a smaller resistance level, maybe it's a pullback, whatever it may be. You know, we've driven up. I am very cautious when we have a resistance level close by, because, you know, there's a good chance the market might stop there. There's a good chance that, you know, I don't have that much meat in the trade. My risk-reward ratio is ultimately not that good, because I'm going to have my stop here. I just tend to avoid them. Not all the time. There are certain times I'll break that rule. Maybe if it's been really explosive, you know, really explosive open with catalysts and all this good stuff. First pullback here, I might have a go, but I'll be very careful of that. And generally, you know, it's very rare that I would do that, because I'm so cautious of this thing just going up, just stalling. And the only thing, guys, is it's psychological. Right? If I know the potential it's going to struggle there, even if we push through, let's say we push through and get to here and start doing some work on here, I'm going to be like, oh, you know, it's a big resistance level. Normally I might just be fading that. Do I still want to be in it? And I'm going to be two-sided. I'm not going to have the conviction I need. Then let's say resistance is right up there and there's fresh air between them, and I feel far more comfortable with that trade. So when solid resistance is close, it's being careful. And obviously we're talking about longs here, but you can flip it on its head for short. So number 3, when news or data is due. So this, I mean, I'm putting this in terms of maybe currencies or indices or broad things rather than stocks. I know a lot of stocks will rally up until earnings and expectation of good earnings. So this is more like, okay, if we have non-farm payrolls coming up. Generally speaking, I'm not going to buy a breakout before that because I know that majority of people aren't going to position aggressively before non-farm payrolls, because why would they? There's no they can't justify why they've done that. If they're just putting in half of their fund into this currency pair before non-farm payrolls, the fund manager or the investor is going to say, why have you done that? Why have you done that? When the number was coming out and you can trade it later and you can trade based on data, you're just guessing. So when there's news or data due or something due, I'm very careful of trading breakouts. So that's specifically if I'm trading, intraday, or even if you're trading, longer term, you've got something really significant at the end of the week and everyone's really looking at it. As we know, some economic data, everyone's really focused on. Some people, sometimes they don't care for that month because it's not that relevant. But when people care about it, it's all in the news. Be cautious about buying the breakout because yes, you might have some people position for an expectation of something, but very often it's not a big money flow and they can tend to fail. So just be cautious of that one. And number 4, when price is greater than the ATR as a day trader. So average true range in the day, if we're day trading this thing, and it's probably the same if we're swing trading the average true range of the week, potentially, just generally when we're outside of the normal. In other words, we're framing the normal here using the average true range. When we're outside of that parameter, being very careful about buying breakouts. Yes, we do get these outlier days when we get multiple, heavy moves, of course. And perhaps you have some kind of process in place that identifies those that says, okay, well, I can break this rule on this occasion when this very strictly is met. But generally speaking, when we're outside the daily range, I'm not going to buy breakouts. If we're up 100 ticks, 100 pips, the ATR is 100 pips, and it's about to break out again, I'm not going to take that because I feel that we've probably done all we've done for the day. Let me look for something else. Number 5, when known quiet periods. So from a day trading perspective, that would be lunchtime. If you've got a lunchtime trade, never trade a breakout at lunchtime. Generally speaking, again, all these things are generalizations, guys, but it's the sort of thing, there's no volatility, there's no volume coming in. Even if it does break out, it tends to grind a little bit. It's frustrating as anything. And from a swing trading perspective, holidays, when we know that people are away from the screen, when the big money's not necessarily making decisions, it does happen from time to time that you get a busy summer. But generally speaking, it's quiet because over history, it tends to be quiet because, most people are on holiday. Christmas time, the holiday time around there, all those known holiday periods where, children are off school and the managers are booking holidays, they're booking time away, and one manager's away, one manager's away. Decisions aren't being made effectively is what I'm trying to say. So generally, we've got to be careful about buying breakouts. Now, of course, when we're in a bull market or we're just trending along, these things are still going to grind higher. But from a point of view, if you're trading a volatility expansion type trade, looking for that explosion, just bear in mind that if it's quiet, I know intraday, definitely lunchtime, but swing trading as well, being mindful that, hey, this might not explode. Of course, we've had times when bull markets just run on through summer and Christmas, and if you buy a breakout, you'll be fine. But just bearing in mind that there may not be fresh money coming in, you might not get that explosion that you really want. All right, guys, that's 5 for you. Any more? Comment section below. Thumbs up if you like this kind of stuff. Subscribe yet if you haven't already. And I shall see you in the next one. Keep your risk managed. Good trading. Goodbye.